Hey, what is up, everybody? My name is Sean Grapevine. I'm a branch manager for U Mortgage. The name of our branch is ATL Mortgage because we are here in Atlanta. I've been a loan officer for 8 years, been in the broker world the entire time. And we just wanted to take some time today to talk about the broker advantage, to dive into the numbers about why brokers are clearly the better choice. We've all said brokers are better for years and years and years, and it's true because there's higher level of service, higher level of expertise, and lower cost. We've always said that, and now we have the numbers to actually back that up over the last 3 years, continuing into this year. So we just want our clients and our real estate agents and anybody who works with us, our employees, our coworkers, our colleagues, to have the best experience with the most efficiency and the least costs possible. That's what being a broker is all about. It's why I started my own mortgage brokerage. It's why I moved in with you mortgage, and it's why more and more LOs are joining the broker world. Quick background about what a broker is versus the alternative. Like if you're not a broker, then you're a retail loan officer, or you're a non-bank lender or something like that. Essentially, a broker gets to choose from any number of what are called wholesale lenders, and can shop service rate, fees, turn times and stuff like that between a multitude of different lenders that all have different pricing and different turn times depending on scenario and where they're at. So there are times where my favorite lender gets clogged up and they've got too much business and their turn time slow down a little bit as a result of that, and that just means, hey, there's somebody else waiting to take my loan. If you're working in a retail environment, you might have great ops, you might have great experience, but like if you get super busy, then there's nowhere else to put your loan. Like, it just has to get in line. Or if you get, slows down a whole bunch, you run the risk of layoffs and slowdowns and super high pricing because there's not enough volume to pay all of the people who are working there. So that's a big difference between retail and wholesale or brokers. So let's dive into the slides about the broker advantage. The numbers that we're going to be looking at today are pulled from HMDA data, which is the Home Mortgage Disclosure Act. Dang it, I knew that's what it was. The Home Mortgage Disclosure Act. Basically, when you fill out a loan application, you'll see there's all sorts of questions about your race and stuff like that. That's obviously not because we're making underwriting decisions based off of your race and ethnicity and things like that. It's because the data is important to let our regulators know that we're not, and that lenders aren't making decisions on credit based on race, or aren't inadvertently having an impact on a certain race or certain ethnicity that they shouldn't be. Right? Like, your pricing should just be about your credit score, your loan to value ratio, purchase price, things like that, the scenario of the actual deal. You'll see that some borrowers do end up getting treated a little differently, and that treatment can actually be put into buckets of race, and we'll see who's doing the good treating and who's doing the bad treating. No spoilers. This is all based on agency data. There's no so based on agency data, there's no material difference between the default rates in wholesale and retail. There used to be. So brokers used to have more loans go into default than retail banks. There's a number of reasons for that, but it basically stopped in 2008 once regulations were put in place that governed everybody in the exact same way. Since 2008, the numbers are flat across retail, non-bank lenders, wholesale, correspondent, doesn't matter. It's pretty much all the same. And you'll see that, like, the minor variations in default rate between all of these different channels, it's really impressive because the number of defaults in the United States on housing in the last 5-10 years is so small compared to what it was in the first decade of this century. And then we're also going to see the exodus of retail loan officers to the broker world as the broker world becomes more refined, has better and better technology, is able to support larger and larger broker shops. We've seen retail LOs either start their own shops or move into established broker shops. Mortgage brokers provide to clients broader access to credit, and all that means is we've got more tools. So I have 11 lenders, and each one of those lenders probably has 20 different programs, and there's a lot of overlap between those programs, but each of those lenders definitely has a program, an actual loan program that nobody else does, something that they consider their own. Some of this stuff is called non-QM or DSCR. That's like if somebody wants to is buying a rental property or a fix and flip or something like that. Some people are self-employed, and it's hard to qualify them based off of their tax returns because they have so much written off in order to minimize their tax responsibility. We have something called bank statement loans for people in that position. If you're 1099 for Uber, we have 1099. I mean, and there's lots of retail banks that have some of these programs, but we work with the equivalent of, like I said, 11 different banks. So if you come to me, I'm able to sort of pull from all of these places to put you in a program that actually works for you. And then the plain vanilla programs, the conventional one, the FHA, the USDA, VA, we don't have any additional what are called overlays, no additional rules or guidelines over those, which is common for the broker channel, and we're like thousands of dollars as cheaper than anybody else on those. So broader access to credit. When you do get the credit from us compared to retail, it's cheaper, and it's also safe. Lower default rates than in like recorded human history. Pretty nuts. Here is what I think is an amazing graph. So this is the top 10 wholesale lenders. Again, lenders that lend to brokers' clients. So the kind of banks that I use. They served more minority borrowers in 2020. In both, for all DTIs and like 41 to 45% DTI. DTI is debt to income ratio. The most common debt to income ratio for an American buying a house is 41 to 45%. This is just like your average American. They got a little credit card debt, got a couple car loans, maybe some student loans, and they're buying a house that probably makes up about 30% of their monthly income. This is like the standard, the American dream, right? So for people in that super common standard American 41 to 45% bracket, retail lenders out loaned us, right? So they did 80,000 more loans to all borrowers. But the impressive thing is so already they're just bigger banks. They do more volume. They're like, they've got commercials. They're advertising during freaking the halftime of the Super Bowl. Like, they just do more business. There's more of them. There's more loan officers that work there, etc. But despite that, despite out loaning us by 80,000 people, wholesale lenders did more loans for minority borrowers, which is so cool. Now, you might think, well, maybe there's more money to be made for minority borrowers. Maybe these wholesale lenders are pulling the wool over minority borrowers' eyes. You might think that, but maybe if you stick around, you'll see a slide that directly disputes that. So, if you look into the all DTI range, so anything above 45%, but probably more commonly the 0 to 40.9% range, you see that retail non-banks, again, 400,000 loans outloaned us. I mean, that's crazy. That's what's that? That's 400,000 and 700. It's more than 50% more. But interestingly enough, we did 10% more in loans for minority borrowers. And again, we did it at a lower price. So super cool. Wholesale lenders have the flexibility to meet like the needs of your average person. And they are better at this makes sense to me. Like a retail bank, you walk into it, it's very cookie cutter. If you don't fit directly into the box that they created for their loans, there's not a lot of like expertise. There's not a lot of critical thinking. There's not a lot of problem solving that goes on, and unfortunately, minority borrowers in the United States have it unfair from our financial system, from decades of systemic problems that we're not going to go into right now, but that can make it harder for minority borrowers to have access to credit. Wholesale lenders have overcome that barrier to entry for minority borrowers. So they might not have any success walking into a bank, just location, being like, hey, I need a mortgage. I got this one small thing with my credit that's off. You come to a broker, that's not going to be a problem. I love the next two slides. It's so cool. So brokers just save everybody. Like this is for all races. Borrower lifetime savings by using wholesale versus retail. So all of these numbers are how much you're going to save, no matter who you are, all races. It's fantastic in various situations. So people like for everybody, doesn't matter what your income is. In 2018, you saw upfront savings on each loan of about $1,300, and then like rate savings, so savings from lower interest rates of $4,300 for a total of $5,600 uh, over the lifetime of a loan for all income levels, all races. So, and that increased in 2019. Everybody's making more money in 2019. We experienced something called margin compression in 2020. So, all like, retail lenders and wholesale lenders were just a little bit closer. And you saw it come down a little bit, but still saving $8,300 over the life of the loan for all income levels. These numbers stay almost exactly the same for middle income. And then they go down a little bit for low income. But the good news for the low income borrowers is that it's continued to go up from 2018 to 2020. And if these numbers were listed as a percent of one's income, right? Low income people are probably buying cheaper houses. And that means that this $3,300, $5,900, and $6,500 being that close to the all incomes and the middle incomes means that like this probably constitutes a much higher percentage of their income, a much higher percentage of their purchase price. So actually low income borrowers are benefiting more from using the wholesale side than even middle income and all incomes. Uh, I think that makes sense. I hope I explained that well. Just for like a couple pieces of commentary. Again, this is the 41 to 45% range, the most popular bin across most categories. We used the FFIEC definitions for income and race. The FFIEC is the Federal Financial Institutions Examination Council, just a governmental body that defines things. Cool job. 2020 was crazy. We still managed to save everybody money across all incomes. And yeah, this assumes that you have the loan for the entire 30 years. Obviously, nobody does that, but it's like a helpful way to look at this. All right. Next up. So what I love about this is for minorities. And this goes back to what I was saying earlier. Like, wow, maybe wholesale lenders are just selling loans to minorities because they can make more money off them. Let's look at the shape of these two graphs. I just like clicking back and forth between them. Like, can you even tell what it's amazing. They're the exact same shape. Doesn't matter what race you are. Essentially, wholesale lending is colorblind. It saves you money. And in fact, all of the numbers are so much higher for like the savings are so much higher amongst minorities that are borrowing from wholesale lenders, which means brokers, than with retail lenders. And I don't think that's because wholesale lenders are like cutting a great deal for minorities and then like not doing such a great deal for anybody else. I don't think there's disparate treatment there. I think what happens is that like retail ends up charging more inadvertently, but still noticeably for minorities. So wholesale is charging the same no matter what. Everybody's getting the exact same deal. It's just that it's more expensive to get a loan through a retail bank for minorities. Inadvertently, yes, absolutely. Noticeably, also yes, absolutely. So you see here in the all income levels, I mean, these graphs are the exact same shape, right? You know, a little 2019 bump for these two, and then stepping stones here. 2019 bump for these two stepping stones here. And now you're seeing these huge, right? So low income, using the same definition of low income provided to us by the FFIEC. Now you're seeing $8,100 saved in interest and upfront cost savings for low income minorities who borrow from wholesale lenders. That's crazy. That's so much money. You know what you could do with $8,100? $8,100. You could, if you were buying a $200,000 house, you know, let's say it's a $190,000 loan, you could buy down your interest rate like 3/8%. It's not more, 0.5%. You could save yourself $150 a month. You could buy, you know, like the stuff you need to buy when you buy a house, like a couch or like a, you know, lawnmower, or, you know, dog, that kind of thing. You would have money left over that like you wouldn't ordinarily have left over if you had used a retail lender. And the crazy thing is like all the retail loan officers I know make less than wholesale loan officers because the retail this extra $8,100 that minorities are spending at these retail banks isn't like, oh well, the salesperson worked harder, so they're just getting paid a lot better. It's just like filtering into like crazy logistical nightmare stuff, like owning a branch and having customer service representatives that are like in person that are hard to reach despite being there in person. That like, you're gonna have huge compliance and legal teams, giant marketing budget. You're basically just paying for Super Bowl commercials when you go retail. So, super impressive to see that wholesale lending is cheaper for everyone, and it's even cheaper for minorities. I'm super proud of that. I'm really happy about this. So minorities, just for the record, all races other than white, and whites of Hispanic or Latino origin. I think that's a fair definition. Let's go to the next slide. Just quickly, I think this unfair characterization, or maybe previously fair characterization of the wholesale slash broker channel is not as popular anymore. I haven't really heard anybody say this since like for a few years, but it's worth touching on. There was a time, the pre-financial crisis time, where wholesale lenders had higher default rates, so borrowers were less likely to make payments than all the other types of channels. So wholesale, retail, so wholesale, non-bank, retail bank. It was just like it got better and better as you went towards retail. After and honestly, huge issue. I wasn't part of the industry then, so I can just like shake my finger and say, I don't know what you guys are doing, but you did it wrong, and you represented us poorly. Luckily, since the financial crisis, you have some great numbers all across the board. I mean, the numbers are like astounding, right? So 2009 to 2010, this is just 2 years after the financial crisis. You're seeing default rates in the 1% to 2% range with wholesale banks at the lowest amount. 2011 to 2017, greatest bull market of, like American history. You see, the wholesale bank lenders at 0.8%. And I mean, even the highest, right? Retail banks at 1.2%. This is an industry-wide, like, you pat yourself on the back. We did great. The regulations work. Like 1% default rate was before this. Obviously, if you look at the graph from 99 to 2004, 2005 to 2008, 1.2% was just like unthinkable. Well, we beat the unthinkable 2018 through 2019, and default rates are essentially too small to measure. 0.3, 0.2, 0.3, 0.2. Great work, everybody. Keep making your mortgage payments, and let's not let that left side of the slide happen again. And the proof is in the pudding, guys. Obviously, clients love mortgage brokers because they love saving $6,000 to $12,000 per transaction, no matter their race, no matter their income. So there's more demand for mortgage brokers. And as a result, active brokerages have skyrocketed. We just had 10,000 or so in Q4 of 2017, and that's increased by about 55% to Q4 of 2021. You see that we have 15,000 active mortgage brokers. The mortgage brokerages, the largest one has 1,000 people. The smallest ones have just one person. And you'll see that, like, along with the growth in number of brokerages, you're seeing more people who work at mortgage brokerages, like myself. You see in Q4 of 2017, 24,000 people, and then 46,000 people by Q4 of 2021. Steady rise, and that's double the amount of loan officers at mortgage brokerages. And you're just going to see that continued rise, especially experiencing the rise in rates. I can't tell you how many of my clients are like, hey, I heard you're a mortgage broker. Rates are crazy right now. I need your best deal. And you know what? I have the flexibility to give them the best deal. I mean, my default deal is thousands of dollars cheaper than the default deal at a retail branch. And even if a retail branch was really, 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 really trying to win this client over, they would have to slash their fees more than is even like thinkable to even get down to what my default is, right? Like, what would just charge any buyer coming in off the street? Like, they can't even get there via an exception. So you're going to see the mortgage broker channel absolutely explode this year because loan officers aren't dumb. They hate being shopped, and back in the salad days, 2021, when it was crazy. We couldn't do enough refis. People were like, they didn't care that it was a little bit more expensive to go retail because they loved that 2.875% rate, even though it might have cost a little more than the average broker. That ain't going to cut it anymore. You're going to see people fill mortgage brokers up with loans while retail is left holding the bag. It's going to be fun. I can't wait. Come work here. Come work at UMortgage if you're a loan officer, because our rates are low and our ops are amazing. And if you don't want to work at UMortgage, go work at a mortgage broker. It's so worth it. So much flexibility, so much fun, and your clients will love you. So this is just a super short part. We mortgage brokers are getting unfairly taxed 15 basis points, 0.15% of every loan that we do when we sell it onto the open market because of the default risk, right? So if you go back and you see, hey, there's actually not an increased default risk from mortgage brokers to retail loan officers. There used to be. Ended up getting charged this additional 15 basis points, 0.15% of each loan amount. And it doesn't seem like very much, right? That's only like $150 on a $100,000 loan, but it's $250 million industry wide every year. And that cost obviously gets passed on to the customer. And, there are moves in the broker world to ask legislators to get rid of this 15 basis points because it's not supported by facts. You can see we save people money despite this little tax across all races, across all incomes. And we also have the exact same default level as everybody else, like almost a non-existent default level. So write your congressman, get us this 15 basis points back. Credit performance, like I just said, doesn't support this surcharge. Our default rates are like essentially non-existent. We shouldn't be paying a tax for the sins of yesteryear. I think in conclusion, through extensive analysis of HMDA, we can demonstrate that there are material pervasive benefits for consumers provided by mortgage brokers with a wholesale lender. I mean, it's not like, I don't know, that sentence isn't even like strong enough. It's like retail is ripping people off. Let's just say that. You guys can edit that part out. Don't edit it out. Retail's ripping people off. If you're charging so you're not saving $12,000 as a low income person of color that's going through a wholesale bank. Like, you're just getting the same deal as everybody else. You're not saving $12,000 by going with us. You're getting ripped off for $12,000 if you go through retail. If you're a person of color of low income. I mean, this is exactly the reason the regulations from 2008, 2011 came around. And for whatever reason, we end up getting charged 15 basis points on each loan while retail is still out there, essentially redlining. So, and redlining means like making a decision not to offer credit to a certain area, to a certain demographic, or making it more expensive. So, listen, wholesale, there's not material pervasive benefits for customers. It's like wholesale's just the ones that aren't ripping people off. It's as simple as that. I don't know if I'm going to get in trouble for being this mean about retail, but it's just like, the numbers are there. Like it's very simple. It's like an Excel spreadsheet. All you have to do is just sum the column and do an average and say, wow, minorities are getting ripped off by retail. So, material pervasive benefits for going with wholesale and getting your face ripped off going to retail. So in conclusion, we have a conclusion here that, like, honestly, we're just a little bit upset about the 15 basis points. But I think the real conclusion here is that wholesale lenders and the brokers who work with them benefit all consumers across the board to a huge degree, $6,000, $8,000, $9,000, depending on situation. But we especially are beneficial to minority borrowers and borrowers of low income. You see that we are consistently helping people get into homes who would otherwise have less access to credit. That's the whole story of like why most mortgage brokers I know are mortgage brokers. They don't do it just because like they want to get the easy loans. Like they actually want to help people out. You know how much of a pain it is to run a mortgage brokerage? I've done it for 5 years. It's horrible. I have to do my own accounting, but it's totally worth it to be able to help out the people that you want to help out without charging them $12,000 extra on each loan so that your regional manager can like have a nice vacation home. That's the conclusion. If you guys have any questions for me, I would I would love to answer them. You can email me at sgrapevine@umortgage.com. You can find me on Facebook, LinkedIn, Twitter, all that stuff. And happy to answer any questions about this. If you want to yell at me because I was too mean to retail, then I can take that. You can yell at me. I'm ready. Make an argument. I will listen to you. If you're interested in what kind of lender is who, or who is what kind of lender, we've got a list here. So on the left side, we've got the retail banks. So you've got Rocket, or sometimes known as Quicken, Loan Depot, Freedom, Guaranteed Rate, Fairway, Caliber, Cross Country, Mr. Cooper, Guild, and Movement. And I don't want to lump everybody into this, but remember, these are the guys who are charging more money to low-income minorities for no apparent reason. On the right, we have wholesale. A lot of lenders have wholesale and retail establishments. You'll see some are just wholesale only, but like Rocket has a wholesale division, Loan Depot has a wholesale division, and so there's some that have that are in both. The impressive thing is that one side of somebody's company may be doing great things for specific buckets of borrowers, and then may be screwing them on the retail side. Totally boggles my mind, but it happens all the time. Yeah, I'd just like to thank you guys for watching this with us. Feel free to reach out. Let me know if you have any questions. And yeah, if you need a mortgage, find a mortgage broker. If you need a home and you're a loan officer, find a mortgage broker. Thanks, everyone.